we've seen a lot of other big things happen in the marketplace over the last year, whether it have to do with the trade situation, Turkey, Venezuela, et cetera. And we've come in and the stock market's been, the S&P's been down 30 points or more, and then by the end of the day, it's unchanged. So I think a lot of people are saying, hey, instead of my first reaction being to sell, my first reaction is going to be just to step back. And so, I think that has a bigger impact is that we've had all these other instances where new news, whether it be on the political front or on the trade front, have not had an impact on the market. So people want to wait and see how this thing plays out.
I also saw some sort of knee-jerk reaction schools of thought last night in various sources on emails and tweets and research, which suggests a different tack, which is perhaps this will dominate the president's time so much that we won't get these sort of incendiary tweets and incendiary comments because it's going to be occupying his time, and maybe the market can just be the market, perhaps. Is there any thought to that from you? Do you think that that's a possibility, or is this could just ratchet up the rhetoric?
Well, I think, it's like anything else. Again, going back to the boy who cried wolf. When you react so many different times, finally you say, heck with it. And I think that there's some validity to that because the president's going to be harping on these other political situations. The one thing, of course, on the opposite side of that argument is that he's going to have to do some things to deflect the attention of this whole thing. So he might even come harder on certain issues like trade and others to really, firm up his base and things like that. So there's two sides to that story. We know how much he likes to deflect the attention away from him, or at least away from the negative aspects of his presidency or anything else about him.
If the market can shake this off, how are we looking technically? Obviously, I think you might have heard just a little bit on this network yesterday about this new record for the S&P 500, the mid caps, many of the small caps. But is this the top, or is the technical setup still strong, Matt?
Well, I mean, it looks pretty good. I mean, we do have the biggest concern, of course, is will it be a double top? Because that's exactly what we got back in 2000 and in 2007, where the market rallied to a new high, corrected 10%, rallied back to the old high, tested it, and failed and rolled back over. That's exactly what we've seen this time. A rally to a new high, 10% correction, back to the old high. The one thing that I thought was particularly good, though, are two things. Number one is the transportation index making a new high yesterday. That's positive. But I also like the small cap stocks. You look at the Russell 2000. It broke what's called an ascending triangle formation to a new high. It's only a slight break so far, but if that can get any kind of upside follow-through, it could be the kind of thing that gives it more momentum going forward. So